So, Shavyfxhub, let's look at GBPUSD. So, disclaimer, every video we make here is for educational purpose. Every video is for educational purpose. It's to enlighten you and help you in your research work in becoming an all-round portfolio manager. So, your aim of venturing into the market is to be an all-round portfolio manager. You don't need to be stuck in one place. So let's see what the market got for us and swing in immediately. This is weekly time frame. The reason we adopted the weekly time frame is to give us a clear directional bias in the market. I want to see what the market is doing on weekly. So I want to see what the market is doing on a weekly time frame. Now we've been looking at interest rate differential between USD and the BOE. The Bank of England cut interest rate by 25 basis points. So technically, and while Fed had the interest rate steady. So if we are to evaluate based on interest rate where smart money should move in, the interest rate differential favors USD. So on technical, you could be seeing some shift in price towards United States dollar. And I have one more structure there. This is starting from 2023, and you can see that while interest rate differentials favor the United States dollar, but the structure is saying bullish. The vibe, the vibe of the structure is saying bullish. After we see what price have done here, has broken out from a very strong weekly supply roof. This is a supply roof on weekly, and that structure is broken on a weekly time frame. So I will watch it to see if price will break out from that structure, which I think is unlikely. A breakout from that structure will ultimately take price even way below this level. And at this level, we also have a structure at this level. So that is not what I'm anticipating. I'm not pessimistic about GU. I have nothing to gain from British pounds continual collapse. So I have no interest in that. But there is a structure at this level, which I think market will test on weekly time frame. So we are staying cautious. We are staying completely cautious. And the GBP USD interest rate differential is something that we have put into perspective after we have seen the Bank of England policy rates and their monetary decision cut interest by 25 basis points. And we have seen the Federal Reserve holding steady on a cautious wait and see approach adopted by Sir Jerome Powell and other members of the Fed in various districts. So it makes a whole lot of sense to see that we are having a divergent view. Economic data print is saying something different, but the structure of the market is saying something different. So we must look at other upcoming UK economic data by May, I think, which is the closest. We are going to have inflation rate YOY and core inflation. Then on 23rd, we're going to have the retail sales MOM and year over year. We're going to have GDP growth and labor market statistics expected by May 12th, and S&P Global Manufacturing Service and Composite PMI May 22, and public sector net borrowing and a treasury jet auction by May 2022. That is 22 May. So we're expecting these are economic data we're expecting. So the BOA project a slight economic slowdown with GDP growth near zero in Q1 and inflation expected to temporarily rise by 3.5 in Q3 before easing back towards a 2% mandate. Fiscal tightening and cautious monetary policies will likely weigh on growth as monetary policies will expect fundamental data as they unfold to make critical monetary decision. So I think at the moment we are staying on a weekly time frame for GU is to give us insight into what to do next. So I think from here, let's see what she does from here. We'll have a low here. After that low, we had a retest, and I want to hold that responsible. Let's see where it takes us. Let's see where it takes us. So we are going to watch that structure. We're going to watch it. So this becomes my new roof. I have my reason why I ignore this guy. I'm making this my new roof. So I want price to return into my new roof. And a return into that new roof, I will likely see the British pounds sinking again. So a weekly time frame, we have seen the weekly candle present itself tightly. And then when you look up again, you see there is a very strong structure on weekly time frame. You check from your line chart, you see an M structure, break off of a double top, and market so that came here, retested it. This is a retest to that M structure. We have an M structure here, a breakout of M structure, retest one, retest two. So most likely we are going to apply further cautious wait and see approach. So if we have a weekly breakout from the structure where it is now, it's a sell confirmation. So your buy confirmation will still be on a weekly close. So you want a weekly breakout of structure. So a breakout of the structure will ultimately move price here. So we are going to see GBP USD appreciate against United States dollar before the price will start dropping. So from that level, you could technically see that GBP will lose momentum and return back. So this is technical and fundamental trading. So it's not just only drawing chart. We look at interest rate differentials. We look at economic data. Most importantly, economic data. Then we weigh it on scale and see what might be the next monetary policy decision. So it feels good to see that the interest rate differential favors United States dollar at the moment. The geopolitical tension and tariff uncertainty will weigh in, despite hawkish stance of Federal Reserve and the Bank of England staying dovish. We could see a change in trajectory whereby the sentiment of the market might fail to align with economic data. So such situations where we see that sentiment does not align with economic data is because of the reality on ground. The reality on ground is that tariff war has strong implication in the financial window. So it's affecting everybody. So sometimes upcoming economic events really does not really matter these days. As they come, you don't see the market respond to them. So this phase has to come and go for the market to balance, and we begin to see significant impact coming in from economic data prints. But at the moment, they don't seem to be moving the market. Everything is reliant on the tariff and other retaliatory measures, which I believe they must reach a compromise. And this is what we have for GU. Staying on GU weekly gives you a clear idea. We have seen how they defended the weekly. So I want to see a clear breakout of 1.3381 level. Then we can now retest. If we have a weekly breakout from there, then you add your position and go long. Then if by the week opens and we begin to see somewhere along the line on daily, we break down from that structure. Of course, we'll sell down. We'll sell down based on interest rate differential. The interest rate differential favors the United States dollar. And while United States dollar remains hawkish and rate cut put on hold, that means we could see a lot of liquidity flow back into United States dollar. But the market opens today. When I reported around 2 a.m., the DXY was retracing after hitting a daily supply roof. We have seen DXY lost on intraday. It lost on intraday. It didn't close as I expected. So that reversal gave a bullish opportunity for GU, a bullish opportunity for EU, a bullish opportunity for AU, and a bearish opportunity for UJ.